If the market shifted dramatically tomorrow and your clients called you in a panic, would you actually know what to tell them? And I'm not talking platitudes, not let's wait and see. I mean, would you know what was driving it, what it actually meant for their financial position, and what the real options were? Because right now in Toronto's condo market, that call is already happening, and a lot of you realtors are not ready for it. I'm Gord Lemon, the co-founder of the Real Estate Investment Institute, and for the next few minutes, I want to talk to you about what's unfolding in the market, and more importantly, what it reveals about the kind of real estate professional you are or want to become. Okay, here's what's happening. Toronto's pre-construction condo market is in serious distress. Buyers who signed purchase agreements at the peak prices, and we're talking late 2010s, early 2020s, they are now arriving at closing and discovering that their units are appraising for significantly less than what they agreed to pay. And some of them can't close, so they're walking away, they're forfeiting deposits, and in some cases facing legal action from developers. And this is not a fringe problem. This is happening across the city at scale right now. And the people calling the realtors looking for answers, many of those realtors don't have answers. Not because they're bad at their jobs, but because nobody trained them for this. Now, some of you might be thinking, isn't this just like the 1990s crash? And the short answer is not exactly. The difference matters here. Real estate lawyer Leor Margulies has worked through both downturns, representing developers in the 90s and then again today. And he's been unusually direct about this. In his words, and I'm paraphrasing, this market is actually more problematic than the last one. Why? Because in the 90s, the causes were correctable. Back then, you had reckless lending, you had sky-high interest rates, you had frenzied speculation, and when regulators tightened the screws and rates came down, the market could heal. But today, rates are already lower, lending standards are already tight, and inflation is mostly contained, supposedly. But the problem here is structural. The cost to build a high-rise unit in Toronto, when you factor in labor and materials and taxes and municipal fees, developers need to recover over $1,200 per square foot just to break even. But the market is trading below $1,000 per square foot, and that gap doesn't close with a rate cut. It requires a fundamental rethink of how we tax, how we regulate, and incentivize new construction. And until that happens, projects will stall, and the supply tightens, and the ripple moves outward to resale properties. And here's what that ripple looks like on the ground. As pre-construction condos reprice downward, that doesn't stay contained in the new build sector. It bleeds into resale. Buyers in the same corridor start recalibrating what they'll pay for existing properties. Sellers who've been holding out based on 22 valuations are suddenly negotiating. The whole neighborhood reprices quietly but meaningfully. So, where's the opportunity? Well, let me tell you. For clients with capital or strong equity, this market is creating entry points that haven't existed in years. Distressed pre-construction assignments, motivated sellers, land values are under pressure. Everyone likes a sale, right? Well, there's one right in front of you right now. If a client has been sitting on the sidelines waiting for the right moment, this is worth a serious conversation. Now, on the rate side, the Bank of Canada is in a watchful hold. The next decision, April 29th. Governor Macklem has signaled patience. He's willing to look through a near-term inflation bump driven by energy markets as long as longer-term expectations stay anchored. That means borrowers have a relatively stable environment to plan in. Combine that with repriced assets and the math starts to get interesting. Population growth is not slowing. Demand is not disappearing. The supply side is in trouble, but that's actually a long-term signal in the other direction. The realtors who understand this dynamic are going to be the ones having the most valuable conversations with their clients right now. Oh, and just a quick note before I keep going. If this kind of analysis is what you want to be able to bring to your clients consistently, that's exactly what we built the Real Estate Investment Specialist training for at the Real Estate Investment Institute. I'll come back to that in a second, but keep it in mind as we go. I want to come back to the question I opened with, because I think it's the most important question in this industry right now. What kind of realtor do you want to be? There are two types of professionals that I've watched navigate market disruption over the years. The first type shows up with a listing, a CMA, and a process. They're competent, They get deals done. When the market is running smoothly, they do fine. The second type shows up differently. They walk in already analyzing the market shift. They know what it means for their client's equity, their borrowing options, their long-term strategy. They can explain why something is happening, not just what is happening. They ask better questions. They use real numbers. They anticipate concerns before their client voices them. And when markets get complicated, like right now, those are the realtors that get calls first. Those are the realtors who are trusted most and referred without hesitation. The difference isn't just talent. It's not even experience necessarily. It's financial literacy. It's the ability to read a market through an investment and wealth lens, not just a transactional one. Most realtors were never taught this. It wasn't in the licensing course. It wasn't in the brokerage training. And for a few agents, it gets picked up slowly over years through trial and error, if it gets picked up at all. In a market moving as fast and unpredictably as this one, years is simply time that you don't have. And that's exactly why we created the Real Estate Investment Specialist training. It's designed specifically for real estate professionals who want to move beyond their transaction, who want to show up as a genuine financial advisor to their clients, not just a licensed agent helping them sign papers. In a market where buyers are confused and sellers are anxious and the fundamentals are shifting, the realtor who can provide genuine clarity is not just more valuable, they're irreplaceable. So the link to learn more about the Real Estate Investment Specialist designated training is right below this video. Have a look, ask questions. I'd love to have that conversation with you. And if this video gave you something useful, please like, subscribe, comment your thoughts, and share it with a colleague who's navigating this market too. A rising tide lifts all boats, especially when realtors in it actually understand how the tide works. I'm Gord Lemon. Thanks for being here. I'll see you in the next one.